In today's video, I want to discuss the Bitcoin halving and what we can expect leading up to it, how high Bitcoin may go after the halving, how long until the Grayscale ETF runs out of Bitcoin, and if you find any of this interesting, then watch this video. Good evening, everyone. I'm Josh, and you're watching CryptoBits, your go-to channel for all things Bitcoin and crypto news. Now, let's get into the market and insights together. So first off, we're going to be talking about the Bitcoin halving countdown. It is currently projected for April 20th, 2024, and the Bitcoin price is $68,490. And we are about 2 weeks away from the halving, and if we keep up with this rate, then we will be seeing the Bitcoin halving on next Saturday here in the United States. And we have about 1,962 blocks remaining, so it is quickly approaching, and we want to be getting prepared and buying what we can when we can and make sure that we're DCAing. Also, as you can see, the Bitcoin issuance by day currently is roughly around 900 Bitcoins per day. And once the halving happens in 2 weeks from now, that issuance is going to cut down to 450 Bitcoins per day. So that means the miners now will only be competing for half as many Bitcoin, which is roughly about 3.125 Bitcoins every 10 minutes. Now, for miners, it is going to be a big shock for them because the ones that cannot compete will have to go through bankruptcies, and we will be seeing mining companies and firms shutting down across the world. Now, for the ones who can compete, they will still be in the market. And you will also see less centralization in a way. Some will say that this is kind of not good for centralization because it's better when you have more miners and more competition in the market. But at the end of the day, the hash power of the Bitcoin network is going up. And if you would like an explanation of what that is, I have here on the blockchain.com website that the mining hash rate is a key security metric. The more hashing or computing power in the network, the greater its security and its overall resistance to attack. Although Bitcoin's exact hashing power is unknown, it is possible to estimate it from the number of blocks being mined in the current block difficulty. So it even says here that Bitcoin is produced through the creation of new blocks by miners who are rewarded with more Bitcoins for their mining. New blocks are produced about every 10 minutes, and Bitcoin rewards are reduced by half every 4 years. This is just part of the program. It's encoded in Bitcoin itself. So this is very normal. This is now the fourth Bitcoin halving that we've seen coming up so far. The first Bitcoin was obviously mined in 2008, and that was at 50 Bitcoins. And then 4 years later, it was cut to 25. And then 4 years later, it was cut to 12.5. And then 4 years later, we were at 6.25, where we are now. And in 14 days, we will be at 3 Bitcoins every 10 minutes. And 4 years later, we'll be at 1.5 Bitcoin, and so on and so forth. Now, some will say this is a good thing because it drives scarcity in the supply versus demand, because there are less Bitcoins available to be mined, therefore there are less Bitcoins on the market to be bought. So I am expecting the prices of Bitcoins to go up in the near future, and for us to go on a massive rally here over the next 18 months. And so moving on to the next portion of this segment, we're going to be talking about the Bitcoin stock to flow model and where we can expect the price of Bitcoin to reach once we have gone past the Bitcoin halving. And so here on the side, the coloring of the chart tells you approximately the days until the halving. So when we are in the red, we are just fresh into a new 4-year cycle for the halving. And as we go towards purple, that means we are closer and closer to the halving. As you can see, we are currently gone from blue to dark blue, dark purple, to now a brighter purple. And as we get closer and closer to this, we will see a closer and closer color that resembles 0 on the chart. And once we go to the halving, we will go back to being red. And as you can see, the Bitcoin stock to flow model chart has an average price of Bitcoin currently at roughly $51,000. So we are currently above it, which is a good thing for Bitcoin holders, right? Because we like to see higher prices. And the next average of where we could be seeing the Bitcoin price go is to 100,000, 200,000, and it says here the average line is around $450,000 per Bitcoin. So we could be seeing some very, very high price increases over the next 18 months for Bitcoin. So I am trying to be prepared as possible, as you should as well. It is not guaranteed that we will see Bitcoin's price stay or go to 450,000, but we do know the average of the price for the stock to flow model is around that range or that price. So Bitcoin could go above it or it could go below it. So we could see a $700,000 Bitcoin, or we could see a $200,000 or $150,000 Bitcoin. But me personally, I do believe that Bitcoin's price will be at minimum reach approximately $200,000 per Bitcoin over the next 18 months. Now, but if you look at the Bitcoin stock to flow here, you can see that the price of Bitcoin has sometimes gone above it by double, and sometimes is also gone below it, such as in 2022 and 2023. The Bitcoin price was 16,000, and the model price was around 50,000, 49,869 to be exact, right here. So you do see variance in this stock to flow chart, and as you see here, we went way above where the model price was, and here we stayed below it for an extended period of time, just like we have seen here. And then we didn't go above it until after a bit afterwards of reaching a new model price line. So as you see, it stays flat here, goes up, flat, flat. So we could stay below here and slowly climb up and stay below it all the way up until here, and then we cross it, or we could go above it early, just like we did here, or we can go before, or here we went a little bit early. But there's no guarantees on the prices and predictions. These are just my opinions, and everyone has their own. But just looking at the stock to flow model, we can kind of paint a picture of where the Bitcoin price will be in the future. So now, taking a look at the Bitcoin chart here, I am pointing out here that every halving we have seen Bitcoin's price rocket up in price. So in the first halving, the Bitcoin price at the halving date went up 106 times your money, which is very impressive. And in the second one, it did 31 times your money, and in the third one in 2020, we went up 7.5x. Now, for this cycle, we don't know what it's going to do. It's very hard to predict, but even if we do half of 7.5x, let's just say 4 from the price we are at now, so because it looks like we're just going to go sideways to the halving, but it's not guaranteed, we would see a $280,000 Bitcoin. Now, I have zoomed in here on the chart, and I have drawn this little pattern here, and to me, this kind of looks like a bullish pennant. Now, bullish pennant means that when you draw it out here, if we were to do a trend line here, here, copy this, clone, okay. If we were to follow this pattern here, we would see a breakout to approximately $130,000 for a Bitcoin. And here tells you on how to, if you are interested in trading, on how to trade this pattern. I do not recommend trading. I just recommend that you buy and hold on to the Bitcoin spot, because trading is a very, very volatile and dangerous game. But here, if you feel like you are an experienced trader, and most of us are not, this is how you can trade this pattern. You have flagpole here. The easiest entry would obviously be here at the top, which I've highlighted in green, and then you would have a stop loss, which is where you would exit your trade here at the bottom of this channel. So that is how you can trade it if you do decide you want to trade that. Now, whether we break up or down is currently just a waiting game, and that could take weeks or as soon as days for us to find out whether we are going to break up or if we are going to break down. But the safest strategy is to just stick to your DCA plan and continue buying Bitcoin and holding. Now, moving on to the next segment, let's talk about how long until Grayscale runs out of Bitcoins, and why have the fund shifted so much Bitcoin, and whether or not it's a problem. So it says, following its conversion from an essentially closed-end fund to a spot Bitcoin traded fund back in January, investors have been hitting the redemption button, and fast. So fast that Grayscale has experienced the largest outflows of any ETF since March 2009 at over $15 billion since the ETF in January. And it says here the fund has over 328,000 Bitcoin, and that 22.6 billion of the cryptocurrency. But Grayscale started the year with 618,000 Bitcoin, meaning since January it has averaged outflows of 5,000 Bitcoin per day. Also, if it continues bleeding out at this pace, it will run dry of the digital gold by July 8th. So that means that Grayscale has to slow down, otherwise they will have no more Bitcoin left. And BlackRock and Fidelity will own all of their Bitcoins. Now, there is some good news for Grayscale, the article continues, because GBDT is unlikely to sustain that pace as outflows have slowed down massively. Yesterday, just 75 million left the fund. And a comment here by James Seyfart says, my assumption is that outflows will slow from here. To offset the flows, Grayscale has even filed to offer another mini Bitcoin ETF with lower fees to compete better. But as it waits for approval, other funds like BlackRock, massively popular iShares Bitcoin Trust, are attracting massive inflows. The BlackRock fund has drawn as much as 10 billion funds in one day. That is an enormous amount of demand for this Bitcoin now. And this is all available to a whole new group of investors that were previously left out of the market. So you're going to see a lot more demand come as prices increase. Now, time is the enemy right now. Goes through the typical regulatory process, Todd Son says. And he's add that each day flows go to other products. Each day flows go to other products, so Grayscale misses out on that. What is leading to the fast outflows? Son previously told Decrypt that leftover holders wanting to leave this vehicle for a cheaper ETF were part of the cause. And in addition to higher fees, this exodus is also driven by collapsed crypto companies that had exposure to Grayscale, such as FTX and Genesis, clawing back cash for customers. Despite the outflows, which mean BlackRock's iShares Bitcoin Trust is fast catching up in terms of assets under management, Grayscale's business model is still likely fine. The fund has $21.7 billion and is still bringing in decent cash flow, according to ETF analysts. Now, I do believe that BlackRock is going to hold most, if not a large majority of Grayscale's Bitcoin at some point, because it looks to me that Grayscale holders are wanting to get out of that trade due to all of the bankruptcies that have been filed by these scam companies like FTX and Genesis, who are invested in Grayscale and need to claw back some of that money for the investors. So, also, let's see here, Eric Balchunas told Decrypt, I don't know exactly how much money Grayscale needs to run their business, but an ETF with $1 billion that charges 1.5% would be a decent little revenue generator, and they are currently at 20 times more than that. So they have plenty of money to run their business for what they're doing now. So hopefully they will continue to slow down with the selling, and with that means we have less supply on the market while demand remains the same, if not goes higher. He also added that Bitcoin's rise in price is also only helping the fund manager and subsidizing the outflows. If Bitcoin's price were to take a massive nosedive, that would hurt the business, he added. But the price of Bitcoin is up over 40% since the SEC gave the ETFs the green light in January. It also touched an all-time high of nearly 74,000 last month. Given the ETFs and the power of that catalyst and the halving coming up, it looks like Grayscale will be fine for a while in terms of revenue, Balchunas added. Seifert also added, Grayscale will likely be just fine as a business because they still have $20 billion worth of Bitcoin. For its part, Grayscale told Decrypt that there was nothing to worry about and that this scenario was all expected. It's arguably thanks to them that the Bitcoin ETF hype is so hot right now. In a landmark moment for the crypto industry last year, a judge sided with Grayscale in a lawsuit agreeing with the firm that Wall Street's biggest regulator lacked a coherent explanation for saying no to its proposed conversion to an ETF after years of denials. Because Grayscale has been going to the SEC trying to have this ETF filed year after year after year, and the SEC has been saying no, no, no. And finally, with all that pent-up demand, we finally got approved, and the price has reacted very positively to this. And the ruling basically paved the way for the SEC to give the green light to allow spot Bitcoin ETFs to start trading on American stock exchanges. Now, without Grayscale taking the SEC to court, investors may not have the selection of Bitcoin investments products they do now. And finally, we're going to cover this article before wrapping up this episode. The U.S. added 303,000 jobs in March, outpacing expectations for 200,000. The ETF-led Bitcoin rally has stalled over the past 3 weeks, at least in part thanks to economic indicators pointing to higher than expected interest rates. The U.S. jobs market continues to exhibit strength, with the government reporting the addition of 303,000 jobs last month. That's the strongest headline number since May 2023 and easily topped economists' forecasts for 200,000 and February's 270,000 additions. The unemployment rate in March dipped to 3.8% against expectations for 3.9% in February's 3.9%. The price of Bitcoin fell about 0.5% in the minutes following Friday morning's report to 66,000. In traditional markets, U.S. stock index futures gave up a chunk of earlier gains but are still modestly higher. The 10-year U.S. Treasury yield rose 6.5 basis points to 4.38%, and the dollar index added 0.5%. Coming into 2024, markets had priced in as many as 5 or 6 U.S. Reserve rate cuts to begin as soon as March. The economic data, however, hasn't cooperated. Inflation has actually risen somewhat in the first quarter of the year, and job growth has remained robust. March has obviously come and gone with no rate cut, and traders ahead of today's numbers had moved expectations of the first rate cut to June or July. According to the CME FedWatch tool, a total of just 3 rate cuts are expected for the full year, and even that could be too much. Speaking yesterday, Minneapolis Fed President Neil Kashkari suggested the possibility of no rate cuts at all in 2024. His remarks prompted a sharp reversal in stocks, with the major averages closing down more than 1%. Just following today's numbers, swaps trading indicated expectations for the first rate cut had moved out to September. Checking out other report details, the labor force participation rate rose to 62.7% from 62.5%, suggesting sizable numbers of people returning to the workforce. Average hourly earnings rose 3.3% in March, in line with expectations, and up from 0.2% in February. On a year-over-year basis, average hourly earnings rose an inline 4.1%, down from 4.3% in February. Now, that is the end of the article. Now, let's go and summarize that. So, in summary, this bullish news for the economy is also good for Bitcoin and cryptocurrencies, because as more people are returning back to the workforce and they have more money will be looking to also enter the markets like Bitcoin and crypto and housing and other assets, also like gold and silver, and this will lead to price increases overall. And that concludes today's video. Please leave a like and comment below, and remember to subscribe for future updates. I appreciate you watching, and I'll catch you all in the next one. Keep calm and crypto.